Welcome back to the Brent Bruce Daily, where each day we take a look and see where home loan interest rates really are, what is making them move, and what to expect for the future. Today is April the 28th, 2023. It is now 3:19 p.m. Central Time. And as you know, today is a big day. Today we receive the Personal Consumption Expenditures Report, which is a measure of inflation that we pay close attention to. It is number two on my big four list of reports or activities that we pay attention to. Number one being the movement of the Federal Reserve to the federal funds rate. Number two being the Personal Consumption Expenditures Report, which is a report we're going to look at here today. Number three is the Consumer Price Index report that we got way back on, I believe, the 14th of the month. And then number four being the Producer Price Index, which again, I think that was on the 15th of this month. Now, we've been anticipating the report that came out today because it's been quite a while since we've got one of these reports that we like to take a look at, all the way back from the 15th and 14th of the month, all the way here to now the end of the month, the 28th. And we've been floating up and down, reacting to other things such as speeches from the Federal Reserve chair people and other things like that. So now we actually have the report that we've been wanting to see. It does show inflation coming down pretty strong, pretty heavy this month. So hopefully, what that's going to allow us to do is see the Federal Reserve when they meet again, which is going to be next week. They're going to make their announcement on the 3rd, May 3rd, about what they're going to do with the federal funds rate. Now, because the headline reading of the Personal Consumption Expenditures Report shows such a large drop in inflation, this may give them the green light to not increase the federal funds rate by an additional 0.25%, which has been the general consensus of the market up until today. So hopefully that's going to allow that to happen. We don't increase the federal funds rate. That would really trigger good signs according to the way that the bond market would read that, and hopefully interest rates would go down quickly. Now, if they do increase the federal funds rate by another quarter, we're going to talk a little bit more about that next week before that day comes. But essentially, it's still going to be a good thing, I believe, because they're going to continue to fight inflation. And I think it's the end of their federal funds rate increases for this cycle. So we are very close. So let's take a look and see where we're at on our Personal Consumption Expenditures report today, as well as our interest rates and how our mortgage-backed securities are responding. So here we are, moving over to the Bureau of Economic Analysis. This is definitely one that you want to go ahead and bookmark here. Great reading each morning. No, actually, I'm probably one of the only people that actually reads this when it comes out. But this is where I take a look and see what's going on. I will put this link in the information below in the website here or on our video. And it shows right here, PCE. This is the headline reading of Personal Consumption Expenditures Report here. Now it shows for the month of March. Now, again, the report that we got today, April the 28th, was the reading of inflation in March. Okay, so it's a month behind. And what we're seeing is a comparison of the inflation increase from February to March. So it shows right here that in February of last year, the headline number was 0.3% up, and this month it's 0.1%. Well, that's a beautiful drop, right? That is a large drop month over month. Now, here's what really matters. The headline reading personal consumption expenditures last month, the annual reading at that time was 5.1%. Because of this month coming in low at 0.1 and also kicking off a reading from the month of February of 2022, we had a tremendous drop in the personal consumption expenditures headline reading down to 4.2, almost a full percent drop in the annual reading. That is a huge difference. Now, what we pay a little more close attention to here in the bond market and when we look at home loan interest rates, because the Federal Reserve pays closer attention to this, is the core reading of the personal consumption expenditures report. So that is here. So PCE excluding food and energy. That is what we call the core reading, which is whatever the reading is minus food and energy, because food and energy is deemed to be too volatile. So gasoline is very volatile. It goes up and down very quickly, which always plays a big part in the headline reading, but no part in the core reading. And that's why we pay more attention to the core reading. So last month, the core reading was at 0.3 for the month of February. Now we're watching and getting a report for the month of March at 0.3 as well. Okay, so that means that month to month, it really didn't make a big difference. But what did it do when it comes to annually? Because again, we look at month over month readings and we look at year over year readings. Year over year readings, of course, are going to be something that we're going to pay very, very close attention to, but month over month allows us to see more currently what is going on. So let's take a look at this little chart here that I have put together, and we always like to take a look at when it comes to the PCE. So you remember seeing this. Now, what we had in here before, the month of March 2022 was a point 0.4. Now we get to kick that point 0.4 out and we get to replace it with a point 0.3. So now we went from 4.6 to 4.5, 4.7 before. Does this look like inflation is coming down? 4.7, 4.6, 4.5? Yes, it does. And what we have to then take a look at is what is going to happen in the coming months. What are we kicking out that's going to allow us to feel good about future months? Because if we got a 0.2 reading of core inflation, whether it's the consumer price index or the personal consumption expenditures report, either one, if we got a 0.2 every single month for 12 months in a row, we'd have a 2.4 year over year reading. That would be excellent. And definitely the market would love that because the target that they're shooting for, the Federal Reserve wants to see, is a 2% inflation rate. Now, again, there's a lot of talk about that right now as to whether we should really be sticking to that, but that is what they want to see. So, what is going on here with our mortgage backed securities? After a day showing inflation about where we expected it, well, we are up 27 basis points. We had a couple of rough days here the last 2 days, but we're up 27 basis points right now. The 10-year Treasury down 9, well below 3.5 at this point. This is excellent, excellent news for us. And if you look here, you can see we're above the Fibonacci level. We're above the 100-day moving average. We're banging up against the 25-day moving average, which pushed us back earlier today. And then we've got our, nemesis, the 200-day moving average above us. So what does that mean for the future? Well, obviously, if we're hitting up against the 200-day moving average and we're not seeing a move, first of all, it's Friday. We all know on Fridays, banks are conservative. They take some chips off the table. They pull back a little bit. So there may be some more positive moves for us on Monday or Tuesday as they digest the information from our personal consumption expenditure report of today. However, I think tomorrow or next week on Monday and Tuesday, you're not going to see much. And the reason is because it's going to be so soon after that that we get our reading from the Federal Reserve as to what they're going to do with the federal funds rate that they might just kind of hold on to everything. Even if the markets improve, they might just kind of hold on to everything, see what the Federal Reserve does, and then kind of break loose one way or the other. So again, next week is going to be a big week on Wednesday when the Federal Reserve meets and makes their announcement. So where are we on our home loan interest rates? If that is the case, let's go over here and run our Brent Bruce Daily, our very well qualified 30-year fixed conventional, 25% down, 800 FICO score, wonderfully qualified client. Right now, we are sitting at 6.625%. Take a look over here where the United is down here. All right, so let's open this up. 6.625% with a pretty healthy credit of $1,001. Let's open up Flagstar Bank, which is the most aggressive today on our no point loan. And again, to get down to maybe a 6%, we always like to look at 6% and 5.999 is costing about 1.329 points. All right. So a little bit more expensive to get to that 5.99. Let's look at 11 mortgage. Let's see what they have going on. So 6.625, you're only getting a $545 credit to get to 5.999, a little bit more expensive, 1.458, a little bit more expensive to go there. Let's take a look at PRMG. They're coming out of nowhere. So all of a sudden now they're at 6.625 with a little bit of a credit, $122. They're not even offering a 5.999. See, for whatever reason, they don't even want to go down to that number. And then let's take a look here at United Wholesale, which we like to take a look at each day because they tend to be more aggressive on their buy downs. So 6.625 is costing $76. 5.999, there we go. Okay, so they are the fourth most expensive for a loan with no points, but they are the very best priced for a loan with 5.999% and 1 point. So this is why, guys, this is why you work with a broker. Okay, so what I just showed you, all of those banks, I'm not just showing you banks that like this isn't Lending Tree. Okay, so I'm not showing you these banks so that you can go call Flagstar, 11 Mortgage, PRMG, United Wholesale. That is, these rates are not what you get. These interest rates are if you go through a mortgage broker. We have agreements, brokers have agreements with those banks and many others to be able to offer lower interest rates than what their retail branches offer, because we're taking on the expenses of running a company and handling the marketing and securing the business for them. It's an entirely different business channel. So understand, if you like what you see there, you have to contact me or a broker like me to be able to give you this array of banks and products at way lower rates than you're going to get walking in the door. Even if there was, I mean, Flagstar is a bank. They're a regular bank. You can get a checking account, savings account, auto loan, or anything else. I think they're more in the Northeast, but you cannot walk in there and necessarily walk out with a rate that you're seeing right there, because those are wholesale rates only through brokers. Okay, so let's take one more look here at the parameters. Open this up here. This is the parameters for what we were talking about today. Went a little bit long here today, but I know that I kind of cheated. The last couple days, I wasn't able to get the reports out, and today is a very big day. That's what's going on. Have a great weekend. Let's make sure that we like, subscribe, share, hit the notification bell up in the corner, and let's see what the Federal Reserve does next week. Have a good weekend.